What is up? What is up, everyone? Hope everyone's having a good day today. Um, the audio is okay as well. But anyway, so we're gonna do a advanced market structure PDF series. So this is a market structure PDF that I made, and we'll start from the basics and go through all this, and then we'll go through all of these I guess you could say top-down analysis breakdowns, right? So like for example, right, I have AUD CAD, and we're starting on the 4 hour, and then you go down into the 15 minute after you see a break of structure, and then a retracement back up into that previous area of broken structure, right? So yeah, we'll get into all of that. This is going to be a good series. It'll be fun. I'm not sure how many videos it's going to be, but you know, it'll be fun. But yeah, anyway, let's get into it. So, what is the basic movement of the market, right? When we think of the market, what do we think of, right? We think of uh, uptrend, right? A downtrend, and sideways movement, right? But what consists of a uptrend, right? You see right here, a series of higher highs, right, and higher lows, right? Higher high, higher low, higher high, higher low, and so on. That makes an uptrend. And what makes a downtrend is a series of lower highs and lower lows, lower high, lower low, right? And then when we get to a structure point right here, where the downtrend stops making lower lows, right? And then right here, you get that shift in market structure, that break in structure, right? So now price failed to make a lower low here and continued to reverse actually back to the upside, right? Continuing that series of higher highs and higher lows. And then this is just, a sideways uh, picture of consolidation, right? So in a consolidated market, really is just means that it's moving sideways, right? It's not trending, right? And there's not really a clear, highs, clear low, or a lower low, or a clear higher high, because it's not really higher than this one, right? There's a lot of confusion in sideways markets. So I usually tend to stay out of those and don't take any trades, and then just wait for a trend to start to unfold. Okay, so yeah, this is basically a pictogram of, you know, this basic movement of the market uh, picture here, right, that we just talked about. Just a little bit more detailed, right? I show where breaks of structures actually are with retracements. I don't really show that up here on this one. Whoop. You know, there's like this and this, but in between, there's really nothing. But you see, right, and you guys can see if you can see better there. You guys can always pause the video as well and study these charts as well. Because I'm not going to go in every every single picture, I would say, like like in super depth. But when we get to the top-down analysis charts, that's when we'll go all in, right? We'll explain everything that's happening and yeah, but yeah. So this picture here is kind of a similar pictograph or pictogram, whatever you want to call it, of this structure right here. And this is clean structure, right? And when you see the market flowing like this with clean structure and you know which direction the market is going, right? That's just order flow taking place, right? So, institutional order flow, IOF, right? Institutional order flow, right? And honestly, that's the basic movement of the market. That's literally how the market moves, right? We see a high get broken and it retests back in that area. Another high gets broken and it retests back in that area. Another high gets broken and retests back in that area, right? This is bullish order flow, right? Well, I guess you can't really see BOF because there's bearish too, but you get it, right? Same thing here, 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 right? All of these entries that you can get in bearish order flow, right? After you start seeing structure break to the downside here, right? You know that you're then looking for sells, right? We're looking for sells then in a downtrend market. When bearish order flow is occurring, we're looking for sells. When bullish order flow is occurring, we're looking for buys. Okay, looking for buys. We buy, we want price to go up. We want to buy with the momentum to higher prices. We don't want to buy already when price is, at its highest price. That's that's not that's not logical, right? So keep on moving here. Okay. So once again on this, right? You guys can always, if you feel like it, you guys can always pause and study the the pictures that are in here. And I think, you know, if you're in the mentorship group, I think I've sent quite a bit of these pictures, maybe in the media channel. But yeah, so trends inside of trends, right? We just talked about, singular singular trends. What is an uptrend? What is a downtrend, right? Higher highs, higher lows, lower highs, and lower lows. But there's also trends inside of trends. You know, when there's a higher time frame, when there's a higher time frame direction, the lower time frame has to break structure to retrace back up to maybe a higher time frame point of interest, right? And you see in this pictures that I drew, we have right here, right? The market, when it reaches these higher time frame points of interest, you can see structure start to uh, break to the downside again and give us that bearish order flow, right? You guys can see that, right? Excuse me. But yeah, you see a higher time frame downtrend, higher time frame, right? Your higher time frame equals that lower time frame now. So when you have these two lined up, you know that your trade has a higher percentage of winning, right? Oops. Anyways, of winning. So you have a higher percentage of winning when you're trading in line with the higher time frame direction. But what you need to understand is these these lower time frame these lower time frame retracements right here that break structure to the upside. You need to understand that there's something to the left, right? What's to the left? Is it is it previous broken structure, right? Is it a order block, right? Is it a fair value gap? Excuse me. Is it a fair value gap? Is it a 62 fib, right? With your fib? Who knows? Because obviously in this drawing, we don't really get to see, uh, specific points of interest. That'll also be later on in the when we start doing the top-down analysis charts. But let's see how much we have until we get there. We have two more pages. Okay, cool. So yeah, where did we leave off right here? Okay, so yeah, what's to the left, right? We see this. You see your higher time frame point of interest to the left, and on the lower time frame from that point of interest, you start to see structure break to the downside right here, right? And you start to think, oh, well, this point of interest here just gave me a rejection that just broke structure. So I wait for that retracement to sell again, right? Everything is lining up for me as I like as I like my trades, right? Even if it just blows through and needs to reach a higher point of interest, which all of this is getting missing, and needs to reach from here, needs to reach like a higher time frame point of interest, right? And then I look for that again, right? Right. So I hope that makes sense, right? Because it's always like, what's to the left after you see a break of structure, right? What's to the left after this break of structure here, right? And this doesn't even have to go up this high either. There could be an order block sitting here and you chose structure, and then the market just decides to go up here. Just know that that can happen. Just know that that can happen. It happens, right? So, so this is a good picture right here. So what I'm what I'm showing here is in these points of interest. Let's go green. In these points of interest right here, or these retracements, right, from this and this, right? What are we looking at? So say this is your higher time frame. I don't like green. Hold on. Let's go back to black. Say this right here is your higher time frame point of interest, right? Right here. Your higher time frame point of interest. And we see on the lower time frame, right here, we see structure, retest, and give us a break of structure from that area, right? So we saw a rejection from that area, from here, right? After we got this huge impulse, made a higher high, broke structure, we had our retracement, right? And this is what we're looking for. So we'll use that in this picture, of course, we say we'll use that order block, and we can have an aggressive entry here, or we can just do the same thing again on a lower time frame, on a lower time frame, like lower than the one you're already on, right? So I hope that makes sense. And so I think I'm going to stop here on this one, about 16 minutes in, and we will continue on in the next video.